All right, so welcome to another video. Today we're going to take a look at DoorDash stock, and I'm going to give you some insight on it. Keep in mind, none of those are recommendations to buy, sell, or trade the stocks, just my own personal opinion. And I wanted to let you know, if you want to grab my opinion, you can also sign up to the Discord channel and also check out our TradersFly.com website, where we've got a lot of great freebies that you can download, and also upcoming course on risk arrays. So anyways, we've got a few things happening here and I want you to check it out. Anyways, we're going to go ahead and take a look at DoorDash here, and DoorDash is popping quite a bit. As we take a look at this stock, it's jumping here on record earnings report, so it's 12%. You know, always usually wait about 3 to 5 days before getting into stocks after earnings reports, just because it takes time to digest. Sometimes they can keep continuing to inflate higher, but usually you need a kind of a digestion period. That's a little bit of an insight where, you know, everybody's trying to whip around the position, but this stock's struggled, you know. So if we go in and just look at kind of the monthly chart, you can see it's a fairly new stock. So we've had kind of sideways move up and now move down. So we've been getting a lot of reds. So you've been seeing red the last 1, 2, 3, 4, 5 months, 5 months in a row red. So to see such a nice pop, people are probably happy and excited. And even if you look at the weeklies, you can see we've had mostly reds, like 95% red weeks, you know, so even then those green weeks were very minimal. So with this stock, you know, it went up here and it continued to trend to the upside. We had a major move on the downside here, pushing down. Unfortunately, stocks like this, like DoorDash, when you look at these kinds of things, it kind of reminds me a little bit of Groupon, where they kind of get buried a little bit. You know, you have that initial flare maybe, or a little bit of flare, and it can dwindle. So be a little careful here. But it, you know, these kinds of things also have like a buyout potential where they could be bought out. So anyway, as we take a look at this, one thing that I do like about this chart is that as we have this descending trend line, it's starting to kind of break. I also like that we have a nice consolidation pattern right here. So this has a sideways price action. So with the sideways price action, it means it's kind of slowing down the drop, because normally you're dropping, now you're starting to slow down, turn around, and then you could go higher. So now we're starting to see some of that. Now, you'll probably get a little bit of choppiness here before you get a big move higher. That's just typical. Usually you don't see like this pop going straight up, but you'll see like a little bit of chop. And then what you might eventually see is a move to the upside. So this actually is starting to look a little bit better, at least for the temporarily shorter term, at least for this day. Now, obviously, anything can happen. This can reverse and come back and retest these support levels. And you're playing around right with fire here, which is right around that $100 price level. Stocks like to either hold or reject at those $100 price points. Those are some serious levels. So could you start nibbling on this? Yeah, you could start looking at maybe nibbling on a stock like this, but I would be a little bit careful. I probably wouldn't do it as a mega long investment, but it could be one that, hey, this trend or chart, it could push into some higher levels for the near term, but I don't know if I would hold it for like a 20-year period. But let's say we even get a retracement to about a 150 here. 153 is kind of the fib retracement level, and then maybe it'll sell off again. But for a trade basis, to maybe go to about 153, maybe even 173 at this level, that's possible, and it could happen. You can see how it lines up with some of these support and resistance levels at some of these points. So just take a look at those levels right there. So just want to point those out. There you go, right there. And you can see you're getting some support right here. There's going to be some resistance and support in there as well. So notice how it just lines up real nicely on the chart. So those are some of the levels to watch. If it gets into those levels, you might want to start taking profits. And the further it goes higher, take probably more off the table. That's just my take, and the way I would look at it is just some of these swing points right here are going to be a little more active, where people might be antsy to take some profits off if the stock pops. But here right now today, it looks like it's a nice day. It's looking good, and stock is popping after kind of a, you know, a lot of red pressure and selling pressure. Could it create a base? It's possible. I say that because of a couple things. Number one, it's been slowly building a base. We're at a $100 price level, and we're also breaking kind of this descending trend line. So those are the three things I'm kind of watching. The volumes coming in, but to really confirm the move, you need kind of a second day or even a third day and start building a little bit more of a trend rather than a one-day thing. Because with earnings, it could just be a one day and the next day it just rejects it, meaning it could be a one-off problem. Anyway, I hope that helps. Thanks for joining me. Feel free to subscribe and join the Discord server. That is in the link in the description. And check out the upcoming class that we have when it comes to risk arrays and capital allocation. There's a lot of great stuff there that we have happening as well. Anyway, thanks again. I will see you next time in the class or on the newsletter list or any other mediums. Take care.